2% next year. Instinctively, that doesn't seem all that much in terms of pent-up demand. Is there upside risk to that forecast? Could it be higher?
Well, there is that possibility. Let's not forget where we've come from. The annual rates finished 2019 on just 0.8% rise, and sales agreed have been down 3% in 2019 compared to 2018. But there is signs of demand actually outstripping supply. So supply down by 8%, new properties coming to market, and with sales agreed down by just 3%, there is some price momentum there. So a possible upside.
Matt?
What do you think about the results of the election? How's that going to affect the market?
Well, we've got more political certainty. And I think importantly, it's come just before the spring market as well. So spring market, traditional home moving season, very important in the UK. And with lenders willing to lend, high employment, and that pent-up demand of transactions being down for the last few years, I think there's an opportunity for people that have held back to actually come forward with this window of certainty.
Yeah, that's interesting you use that phrase, a window of certainty, Miles, because on the one hand we have a little more certainty as to where the Brexit story goes next. It looks like Brexit will happen for a start. But on the other hand, many economists still point to how the UK economy will be impacted by Brexit and suggest it won't. The economy won't do as well as it would have done without Brexit. And so how will international investors, how will domestic buyers weigh up those two things, do you think?
I think what we've seen in the last few years is a lot of domestic buyers have just got on with their lives. Families don't stop growing, life stage moves still need to happen. So whilst transaction numbers are down slightly, it's 97% of capacity in terms of sales agreed last year. So there is upside going forward, but the spring market, an important window for people. Obviously, lots of twists and turns to come on Brexit, no doubt.
You say lenders are willing to provide mortgages. What does that willingness look like to you right now? And is it on the up, or is it right now you think hitting a high?
Interesting view of the high-end market, and obviously that affects London in particular. But lenders really competing now in high loans. So if you've got a 30-40% deposit looking to borrow 3 or 4 million, you're getting fixed rates of 2 or 5 years between 1.1 and 1.7%. Incredibly cheap money, and that's one of the things that could fuel the higher end market. And the higher end market has really been the laggard in the last year or two as well.
Yes, so talk to me about the difference that we're seeing across different parts of the UK, because your 2% forecast for next year probably hides a lot of regional divergence, doesn't it? I mean, the high end and London, very different to what we're seeing in other regions. Tell me how you expect that to translate. OK, well, coming on to
London, it's not had an annual rise at the end of the year since 2016. So we're actually forecasting a 1% rise in London. And interestingly, in the last 6 months, sales agreed in London 1% ahead of prior year. So there is momentum there. There's been a lot of talk of investment in the Midlands engine and the Northern powerhouse. And again, we think rises are going to be higher there as they were this year, in the range of 2 to 4% in those more Midlands and northerly regions. So a regional picture, but actually everywhere in positive territory.
What do you think the breakdown is going to look like? I mean, what does it look like now, Miles, in terms of foreign buyers to actual, UK-born buyers, and how does it change over the coming year?
Well, we've talked over the last few months on Bloomberg of when is the bottom of the London market, and obviously when's the right time for London buyers to buy. And looking back, as I've said, over the last 6 months, we've seen an improvement in the number of sales agreed. And actually, whilst the year has ended on a 0.5% annual fall in London, any month that we've seen in the last 15 months, actually, that's the second best fall, if you like, that we've seen, the lowest fall that we've seen. So we're on an improving momentum, and I think we might well be moving from bottoming out in the London market to actual recovery, and we've not seen an annual rise since 2016 in the London market.
That's interesting on London. I mean, Miles, politicians like to talk about the housing market. They like to talk about building more houses. They also like to talk about affordability and help for people who are struggling to afford. Do you see either of those things, big house building schemes, Help to Buy, changes? Do you see those themes as dominating in 2020?
Obviously, there were lots of promises by all the political parties, but a lot of builders' shares did jump, and they traditionally perhaps see more support for them in the private house building sector from the Conservative government, and indeed Help to Buy been extended from 2021 to 2023, and then there's talk beyond that of support for first-time buyers with longer-term fixed-rate mortgages. We also really need to see help for first-time buyers with the deposits, though, because it's raising the deposit is the key thing. First-time buyers are the powerhouse of the market, and it is tough to raise that deposit, so perhaps more could be done to help there rather than just rely on bank of mum and dad that a lot of first-time buyers do.